Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. President Trump says the U.S. will begin guiding neutral ships through the Strait of Hormuz starting from today. OPEC Plus agrees to a symbolic production hike in June, sending a business-as-usual message after the UAE's shock exit. Plus, GameStop pitches a takeover of online marketplace eBay for $56 billion. It has just gone 8 a.m. across the Emirates. I'm Joanna Bersace in Dubai, getting you up to speed on these markets. A lot went down over the weekend, but just in terms of markets, we're getting once again a more positive handover from Asia Pacific. Japan closed for a holiday, but we'll get into some of the details. But essentially, what you're seeing there is more of what you had last week. A lot of love going into AI, into tech. Similar theme in the U.S. too. We had a positive close for Wall Street by the end of the week last week. S&P futures today also leaning up towards green. I will tell you that in this earnings season so far, 81% of companies have beaten expectations. So from a micro perspective, the earnings continue to be quite robust. And of course, towards the end of the week last week, we had more of the Magnificent Seven, Apple as well, really setting the tone. So the bar was high for Magnificent Seven, but I will tell you that as far as markets are concerned, we got a beat. There was enough that came through from those big companies to continue propelling this rally forwards. European markets in focus today. We are leaning towards positive, that I will say keep a close eye on geopolitical developments with Trump once again announcing auto tariffs. We'll get into that later in the show. So let's see what the impact is going to be on the auto industry. Once again, this has become an issue. Tariffs at the forefront of the discussion as we walk in on this Monday morning. And then Brent, back in focus. $108 is where we're at. So we will get into this story in a moment, but essentially overnight, President Trump announced that the U.S. were going to start helping some of the stranded vessels in the Persian Gulf get through the Strait of Hormuz. Still, some murky details surrounding exactly how that program is going to work. But initially, what you got was a dip in oil when those headlines came out. And then as people sort of pieced together the lack of clarity on this, we rebounded back to flat. So Brent is still back at $108 here this morning. Now, dollar yen also in focus. We've really actually just rallied quite a bit in the last 15 minutes or so. Once again, the yen gaining ground versus the USD. And of course, the big story for dollar yen last week was that Bank of Japan intervention or suspected intervention. It hasn't been formally confirmed yet. And indeed, the finance minister didn't say anything to that effect when she was asked about it. But the point is, we have traveled around 4 big figures since where we were towards the end of the week, and does suggest that something is going on there, at least in anticipation of maybe another round of intervention, or at least that 160 is sort of the floor in the sand of where Japanese officials are happy for dollar yen to end up. And then finally, one other thing I want to show you just in terms of volatility around equities. Yes, we've been talking about a lot of oil volatility, but VIX down to 17, and you can see this is week-to-week gains for the S&P. It's been back-to-back weekly gains for the U.S. major for all of the month of April. And in fact, April was the strongest month for the S&P, going all the way back to 2020. So that winning streak has been crushing volatility. All right, let's dig in further detail on what's happening with some of these Asian markets. Avril Hong is with us from Singapore. Avril, walk us through the price action.
Yeah, Jumana, the price action is showing a very strong rally in the region today, and this is without the help of Japan markets, which are of course shut for Golden Week. You're seeing the rally powered by South Korea, Taiwan, tracking Wall Street's record, supported by a slew of positive mega cap earnings. In Asia, you have earnings of their own to support the fundamentals for this rally. You're looking at TAIEX being propelled by MediaTek, which upped its AI chip guidance. Now, flip the board. You were just talking about the spike we've been seeing in the yen in the past 15 minutes or so. Of course, we are watching out for further official support, given how the fundamentals for the Japanese currency are still working against it. And we are, of course, following on from what we saw last Thursday, Friday, where there was reported intervention. This is what is at stake for the Japanese yen for the moment. We are sitting around the 156.4 handle, but note also because of the holiday, there might be thin liquidity, which is what our MLive colleagues are highlighting, that might be exacerbating some of these moves. Jumana?
Yeah, exactly that. It is a holiday in Japan today, so maybe it's just a function of thin liquidity, what we're seeing this morning. Avril Hong in Singapore. All right, our top story today. President Trump says the U.S. will begin guiding some neutral ships trapped in the Persian Gulf out through the Strait of Hormuz starting this morning. Posting on Truth Social, Trump also writes that the ship movement is meant to free up people, companies, and countries that have done nothing wrong. Meanwhile, U.S. Central Command says it will provide military support to restore commercial shipping through Hormuz, including the use of guided missile destroyers, aircraft, and drones. For more, we're joined by Bloomberg's UAE Deputy Bureau Chief, Abir Abu Hamar. So maybe let's just start with this plan that President Trump revealed overnight. What do we know about it? And why is it that, looking at the price of oil, we're back to flat on the session, essentially?
Yeah. Good morning, Jemana. Look, so it's dubbed as Project Freedom. This is President Trump's plan that starts today, according to him, right? And it's about the U.S. helping stranded ships that he calls neutral in the Strait of Hormuz to cross through. Now, we don't know how this is going to be carried out. The Wall Street Journal did report that the U.S. Navy is not going to escort those ships. But as you quoted just now, President Trump did say that this is to help companies, countries, people that have been stranded. And the response that he got from this came in the shape of a response from the head of the Iranian Parliament's National Security Commission, that is Ibrahim Azizi, who said that the movement in the Strait of Hormuz is not going to be carried out according to President Trump's, and I quote, delusional posts. So we're yet to see how this gets carried out in the Strait of Hormuz, but it's supposed to start today with the U.S. Central Command also helping the military move in the Strait of Hormuz.
And the UK Maritime Trade Organization reporting as well that there was a cargo ship that actually was susceptible to missiles or projectiles earlier in the morning. So something to be aware of there, underscoring the danger. Abir, where are we with the peace plan discussions now between Iran and U.S.?
That's a good question. So President Trump yesterday did say before announcing this plan that he's not completely satisfied with the proposal that Iran put through. Now, Iran did put through via Pakistan, who's been mediating this, a 14-point proposal. Now, what we know out of this proposal, we don't know all the details of it. Some of it could be pretty much a replica of what we've seen in previous proposals throughout this war. But what we know is that Iran is suggesting an end to the war, a complete end to the war in a month's time, a complete unblocking of the Strait of Hormuz, an end to the hostilities in Iran and Lebanon. And then once that month is over and they both come to the table and agree on that, that is when Iran's suggesting a further month for nuclear program talks. So President Trump did say that there are positive discussions that could lead to positive things that come out of this. And then he said he's not satisfied. And this is what you're seeing reflected in oil prices, Jumana. As you said, oil opened a little bit lower and then it stabilized. And now it's sticking up just a little bit because, we're in a state of, are investors convinced about those talks? Are they convinced that there will be a discussion that would end in fruition? That is what Brent is reflecting today. Yeah. People are just not so sure.
A long-term breakthrough as well. That's the big question. Abir, thank you so much. Bloomberg's UAE Deputy Bureau Chief, Abir Abu Hamar. Well, joining us now is Commercial Bank of Dubai Chief Economist Deepak Mehra. Deepak, really good to have you with us. Let's just build on the conversation that I was having with Abir there about the state of the conflict. And we seem to be at a bit of an impasse right now. It's a frozen conflict, so to speak. Ceasefire in place, but the strait is still effectively shut. And yet equities are telling you a very different story from what oil markets are telling you. Is it just a case of the longer this goes on for, the more that other markets, and here I'm not talking about energy, I'm talking about equity and credit, are going to have to start paying attention to the energy second round effects?
Good morning, Jumana, and thank you for having me. Yes, absolutely. We are in a sort of a frozen conflict, a frozen war, where de-escalation and escalation both look, unlikely in the near term. And therefore, Strait of Hormuz remains shut, and critical energy elements, chemicals and fertilizer, all don't reach the world. Now, for the time being, the world has been drawing down on oil inventories, so we haven't seen really a big spike in oil price, except for the momentary one last week. But how long can the world keep drawing on these inventories? At some stage, that will become difficult. And therefore, we worry about the second order effects, where the lack of supply then leads to demand destruction. And that demand destruction can then be very harmful for the economy and also could hit the job market. And we have a case that if this continues longer, the Fed may be forced to cut rates, not for the right reasons that inflation is coming down, but for the wrong reasons that the economy gets stalled at some stage. So that is a very likely scenario. Now, as far as equity markets are concerned, Jumana, equity markets are less sensitive to what is happening. And when you look at the intensity of energy in US GDP or household consumption of energy, these have all been coming down significantly over the last decade, 2 decades. So it doesn't hurt immediately. And so the current levels of $110, $120 do not have the same effect of $100, let's say, a decade ago. And that's what the equity markets are looking at.
Yeah. But at the same time, I just wonder, at what point, at what backdrop with oil prices does that calculus begin to change? I mean, you say that U.S. equities are sort of brushing off what's going on there, but would it be different, say, if oil were trading at 120 or 130 or even 150, as some people are prognosticating?
Look, if this conflict lasts much longer, this frozen conflict lasts much longer and oil goes to 150, then many things change. But at that stage, the Fed will have to step in, cut rates, support the consumer. Remember, this is a midterm election year, and I think that there will be this situation is more of a political issue right now, more than an economic issue, and that's how we look at it. You look at the equity markets, the earnings are so strong, 27% year-on-year growth for S&P 500 companies, whereas the expectation was 14%. So it will take a lot to dislodge this AI-driven CapEx earnings power of the U.S. equities, and the overall situation. You look at the K-shaped economy, Jumana, the top 55% of the U.S. households who own equities and houses, properties, they actually contribute to 85% of the consumption. So that seems to be fine.
Yeah. I want to go back to something that you were saying earlier, which is your expectation that if this goes on for longer, then the Fed may end up cutting interest rates. That is not the language or the messaging that we got from the Fed last week with those multiple dissenters. You had 3 dissenters opting against an easing bias to the language. What do you think the Fed policymakers are getting wrong then?
I think the 3 dissents came because the statement was quite dovish. And the dissent was for the easing bias, against the easing bias, which was part of the statement. So originally, the statement had an easing bias later on for the year. And therefore, there were 3 dissents against it. So to me, it says that there is an easing bias in general, but it's too early for the Fed to telegraph it, to put it in statement, and that is why you got those 3 dissents.
Deepak, always good to chat to you. Thank you so much for coming on our show. Deepak Mehra, Commercial Bank of Dubai, Chief Economist. Well, coming up, Dubai Airport is looking to scale up flight movements after months of disruption caused by the Iran war. We'll speak with the CEO, Paul Griffiths, next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Dubai Airport is scaling up flight movements after months of disruption caused by conflict in the Middle East. Passenger traffic in the first quarter declined more than 20% compared to the same period last year, reflecting the impact of regional airspace turmoil. Joining us now is Paul Griffiths, CEO of Dubai Airport. Paul, really good to have you with us after what I can only imagine has been an extremely challenging period for you. But I want to start with the weekend news, which is that the Civil Aviation Authority has now announced the full resumption of normal air navigation operations across UAE airspace. They've lifted precautionary measures. What does that announcement actually mean in practice, and what does it mean for your operations?
Well, Jemana, it's very big news for us because, of course, we were operating at something like 38% of our normal capacity in the skies, which was limiting operations on the ground. But actually seeing the announcement of 1,396 movements at DXB, which is our normal daily rate, is incredibly welcome news. That will give our airlines the ability to scale their operations back up to normal levels, and hopefully will then lead the recovery of passenger traffic and cargo traffic for the rest of the year. We're anticipating very strong recovery over the next few months, hopefully led by transfer traffic over the summer, and then hopefully a strong Q3 and Q4 for passenger visitors to Dubai. So I think this is very, very welcome news for us.
I see overnight you've released some of the latest figures, a 66% drop in passenger numbers for the month of March. I mean, no surprise there. For the quarter, down 21%, as we were just saying in the introduction out to you. How does the momentum look in the coming months, and giving the latest news as well from the weekend? What are the forward signals telling you about how quickly we can return back to full capacity again?
Well, one thing that we're very well known for here in Dubai is our optimism and our ability to recover incredibly quickly from adverse circumstances. I think we showed that during the pandemic, and I believe over the next few months you will see a record rate of recovery, led probably by the transfer market. The transfer market to which the UAE has access is about 100 million passengers a year. About 70% of that is captured by the Middle Eastern hubs, and we get 32% of that traffic through DXB. And we believe during the summer, which is traditionally a boom time for passengers connecting through DXB on onward journeys around the world, we will see that lead our recovery, and then a very strong performance, hopefully, in Q4 of visitors to and from Dubai. And I think this will be a very good precursor to that, with the airspace capacity opening up.
Yeah. Paul, has anything changed operationally since the first wave of attempted attacks or attacks? Have you had to change the way you think about operations looking ahead?
It's not really led to any long-term changes in our modus of operation, but as you can imagine, during the conflict, we had something like 100 alerts at the airports, which we had to make sure we followed very quickly. And our obvious prime motivation was to keep our customers and our staff as absolutely safe as we could possibly make them. And I think we were quite successful in that. The brief to everyone was to make the operation at the airport seem absolutely normal. And judging by the feedback from our customers, I think that was largely achieved. We've managed to maintain a level of flight operations which has been quite remarkable under the circumstances. I don't think there's ever been a major international airport that's had to suffer the sort of interventions that we've had to deal with on a daily basis. And I can't praise everyone across the entire country, and the staff and the civil defence, the military, the government, for the fantastic support that we've received, which has enabled us to maintain our operations on a pretty much constant basis throughout the conflict.
Yeah. Let me ask you, Paul, as well, whether looking at destination flows, whether there's been a change in terms of outward destinations or inward destinations versus pre-war that you've picked up on in the last couple of months?
Well, obviously, what we've had to face is the fact that some overseas airlines have had difficulty securing insurance cover with the travel advice that their governments have been putting out. But now we've got something like 51 airlines. Our normal number's about 90. The missing airlines are mostly those from Western Europe and the US, and we're hoping that they will be welcomed back now because of the lifting of the capacity restrictions. And we've got something like 192 cities still connected to DXB compared to the normal 240. But we expect those cities, those airlines and those flights to be added back to our portfolio of routes incredibly quickly. So we are projecting to get back to normal operations and to get the level of customer support and response that we normally see in a normal year very quickly indeed.
Okay. Can I ask whether there's been any change to your annual guidance for passenger traffic by the end of this year? Obviously conscious that, we're just coming off a period of massive disruption, but what does that number look like now?
It's pretty difficult to project exactly what the end of year number will be, but if the recovery is as strong as I think it will be, I think we'll end up in positive territory. We were projecting to get to break that golden 100 million passenger mark this year. I think that may be relegated to 2027, and we're still confident of doing that. Our long-term plans, obviously, for the transition to our new airport, Dubai World Central, Al Maktoum International Phase 2, remain unchanged. Progress is still proceeding. We're preparing for that major transition in the early 2030s. So long-term plans are not affected, and I think this will be just a short-term blip from which we will very quickly recover.
Paul, earlier on you mentioned that some international carriers had been reducing capacity or operations, and I wonder how much of that is an operational consideration versus a fuel economics consideration. How worried are you about the rise in jet fuel prices and the impact it could have?
I don't think it's really connected with jet fuel prices, because I think what we've seen since the pandemic is a shortage of capacity in aviation markets, which has forced airfares up. And I think airlines have been profiting from that for quite a long time. I think the oil price increase will obviously increase the cost base, but airlines will still have to fill their aircraft, and they will have to stimulate recovery. So I think that the keenness of pricing to attract people back in the skies will, in a way, counterbalance the increase in fuel costs. So it obviously is an unwelcome development in terms of airline economics, but I don't think it will affect the recovery as much as some people are suggesting it might.
Okay. And then let me round things up by asking about DWC. It's been a big focus, the expansion there. Are things still on track, or have they been pushed back a little bit by all of the recent disruption?
No, absolutely no change in our strategic objective to focus on Al Maktoum International's development. We are pressing ahead. There's absolute momentum here because it will be a game changer for Dubai airports. We're going to have to recruit thousands of staff, retrain them on what will be a radical new and innovative airport operation, the likes of which the globe has never seen. So we're completely undaunted by current circumstances, and we're pressing ahead to achieve this challenging strategic goal on time.
Paul, great to chat to you. Thank you so much, and wishing you the best of luck as things get back, hopefully, to normal in the coming months as CEO of Dubai Airports. Now for a look at some other stories we're following today. Berkshire Hathaway's cash pile soared to its highest ever as operating earnings jumped in Greg Abel's first quarter as CEO. After a slight decrease late last year, the cash hoard jumped to $397 billion. Abel also resumed buybacks, handing shareholders a payout for the first time in more than a year. Berkshire shares have slipped since Warren Buffett announced last year that he was retiring. The UK is set to enter talks to join the European Union's €90 billion loan plan to Ukraine. Britain wants to support Kyiv in pushing back Russia's front line and regaining sovereign territory. The move underlines what the British government describes as growing defence ties between London and Brussels. And a look at some of the regional bourses. And this was Friday's close. You had the Tel Aviv Stock Exchange ending up 1.1%. Egypt as well being propelled by strong macro story over there. Sideways for Tadawul, but of course one of the best performing indices since the war began. Coming up, we're going to talk about OPEC Plus and their decision over the weekend to produce more. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. President Trump says the U.S. will begin guiding neutral ships through the Strait of Hormuz starting from today. OPEC Plus agrees to a symbolic production hike in June, sending a business-as-usual message after the UAE's shock exit. Plus, GameStop pitches a takeover of online marketplace eBay for $56 billion. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, markets starting the week off with some green on the screen. A positive handover from Asia Pacific. S&P futures leaning towards positive as well, up about 15 basis points. Better close for Wall Street last week. A lot of focus there on earnings and the fact that, as you spoke about earlier, 80% of companies have actually beaten throughout the earnings season, and Magnificent Seven, for the most part, have surpassed those already elevated expectations too. So we got enough out of the big tech companies to keep propelling this rally going. So S&P futures today up 15 basis points. European markets also in focus. We're up 0.3%. Here we're keeping a close eye also on some of the geopolitical developments beyond the backdrop of sort of sagging economic data. We also need to keep an eye out on some of the latest announcements out of Trump and the fact that tariffs are back in vogue again. And he's announced tariffs on autos once again. So let's see the impact that that's going to have on some of those key European automakers. Brent also. So take a look at where oil is now. $108. A bit of a whirlwind. A lot of volatility in the space, obviously. And as the June contract was expiring, we hit $120 and then came down again. But the story this morning is the fact that President Trump announced earlier today that they have a plan in place to help get vessels that are stranded in the Persian Gulf and to allow them to safely navigate through the strait to get to the other side. He's called it a humanitarian mission. However, there are lots of questions about the details of how it's going to take place. Wall Street Journal Access reporting that the U.S. Navy are not going to be providing an escort service. And so, again, questions about whether there actually will be uptake and whether this is going to lead to an outflow of some of those vessels that are stranded, and hence why oil is still at $108. We dipped a bit, but we're back to flat on the session. And then dollar yen, super topical. We're going to get into that in just a moment. Yen has bounced a bit versus the USD today, down 0.2%. But of course, we have moved around 4 big figures since the end of the week last week on reported intervention in the currency. So stay tuned for that. We have a conversation coming up about it. And then finally, switch over. I mentioned a lot of volatility in oil, less so in equity space. The theme there has been strength to strength to strength. Look at those bar charts or the columns right at the end. It tells you week after week the S&P has ended in positive territory. April was the strongest month for the S&P since 2020, and because of that, we are seeing volatility get crushed. The VIX is back down to 17. At some point during the middle of the war, we got up to around 30, but it has fully cratered now. So that tells you that equities, at least, are completely brushing off the geopolitical reverberations from the region. Okay, let's also check in on how markets in Asia are faring. Avril Hong is in Singapore for us. Avril.
Yeah, Jumana, we are seeing a very powerful rally in Asia-Pacific markets today. And the Kospi, TAIEX, they're climbing by the most in almost a month. It's really powered by AI. The chip stocks are rallying hard. This is following on from Wall Street's performance, those records on Friday, along with a slew of positive mega-cap earnings. And even in Asia, if you think of the likes of MediaTek that upped its AI chip guidance, that is one stock that is among the biggest boosts on the TAIEX today. What's interesting also this earnings season is how investors seem to be chasing the rally post-earnings. Now, flip the board. When it comes to the Japanese currency, of course, we have been following on from what we saw, that reported intervention on Thursday. And if 2024's example is any guide, the authorities might be choosing to follow through for the messaging to be loud and clear for traders. And of course, there are a couple of ways that they can intervene, a number of tools and levers they can pull, maybe be directly buying the Japanese currency, but also via rate checks, which is something that we saw earlier in the year. We are seeing sharp gains in the yen versus the greenback in the past hour, but that might also be a function of the thin liquidity given the markets that are shut today. Jumana.
Avril, thank you so much. Avril Hong in Singapore. Let's go back to energy now. Major OPEC Plus nations have agreed on a symbolic increase in their June production quota levels. 7 countries, led by Saudi Arabia and Russia, will add 188,000 barrels a day next month. The cartel's aiming to send a business-as-usual message following the surprise exit of the UAE. Joining us now is Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. There's so much going on in the energy space. Maybe let's just start with OPEC+. This was their first meeting without the UAE. They've gone ahead with the 188,000 increase in production, but it's largely symbolic at this point, isn't it?
Yeah, I think they're trying to project 2 things. One is normality, which is fine, they can have a go at it, but things are clearly not normal just in terms of the membership. And the second is this very symbolic move. But the reality is you weigh up 188,000 barrels a day, which probably won't arrive anyway because they physically can't get a lot of it out, or at least a lot of the producers can't, with the projected losses in the oil market. So you look at the estimates coming out. We had Vitol a couple of weeks ago. We had ANZ this morning talking about basically a 1 billion barrel loss. And I think it's very hard for us to get our heads around what 1 billion barrels looks like. Yeah. It is an enormous number. So 188,000 barrels, not going to change very much.
Yeah, it's not going to move the needle. I want to draw viewers' attention to an interview that the Treasury Secretary, Scott Bessent, gave over the weekend. This was on Fox. And he said that the U.S. is suffocating Iran with economic and financial pressure, suggesting that the rulers in Iran, or the leaders in Iran, will eventually buckle. Let's listen to what he had to say.
We were running a marathon over the past 12 months, and now we are sprinting towards the finish line. And I can tell you that we are suffocating the regime, and they are not able to pay their soldiers. This is a real economic blockade, and it is in all parts of government, all hands on deck.
So both Bessent and Trump are framing the U.S. naval blockade as being very successful. We wrote a story over the weekend, an article talking about all of the measures that Iran are undertaking right now to stop their storage capacities from reaching 100% capacity. I mean, how successful are they at diverting oil at this point?
They're pretty good at it. I mean, look, they've had a lot of practice. Here's I think, what the U.S. administration is forgetting is that they have been dealing with this for decades. Not just the economic pressure, which is absolutely real, but, you know, they were in dire straits economically before this war started. They still are. The Iranian rial is at a record low. It's been plunging. So they're absolutely right that they are squeezing the Iranian economy. What they're underestimating is the amount of pain that the Iranian leadership is prepared to endure, not just for themselves, but for their population as well. And I think there's an imbalance there between the pain that the U.S. economy, for instance, is prepared to endure and that the Iranian economy is prepared to endure. So that's where we have a disconnect here between reality and the amount of pressure that this is going to impose on the Iranians to get a deal.
Yeah, they've also been under a lot of economic pressure for a while now, and it hasn't really softened their stance politically. Stuart, let me just bring you up as well on the latest story of the day, which is the fact that President Trump has announced that they're going to be helping to, I don't want to use the word escort because it seems like the U.S. Navy is not going to be involved in this, but at least to help some of the stranded vessels in the Persian Gulf leave the Persian Gulf. What do you make of the, lack of market reaction to that today?
I mean, I think there's some skepticism that it will get very far. They are absolutely right. There are crews sitting on vessels inside Hormuz, that is inside the Persian Gulf, that have been there far too long. You're right, and there is real suffering there in terms of the crews. So they're absolutely right that this is a humanitarian effort. It needs to be done, but I think there is skepticism, at least in the market today, that this can happen because there's no evidence what exactly is the mechanism. Can both sides agree on which ships? They're saying neutral ships. Who exactly is neutral in this conflict? So, look, I think we're all hopeful that you can get some of these stranded vessels out, and particularly the crews. But I think at the moment we're a little bit hesitant that this will be certainly in large numbers.
And perhaps there's skepticism around where the safe routes actually are. Otherwise, they would have gone for them already.
Exactly.
Stuart, thank you so much. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Now for a look at some of the other stories we're following today. China has ordered its companies not to comply with U.S. sanctions on 5 domestic refiners linked to the Iranian oil trade. Beijing is deploying a rare blocking measure aimed at protecting its firms from foreign laws it deems unjustified. The Commerce Ministry says the U.S. measures unlawfully restrict normal trade with third countries and breach international norms. The collapse of Spirit Airlines is cascading through airports across the U.S., leaving passengers stranded mid-journey and sending rival carriers into rapid response mode to contain the damage. The airline has canceled all flights and told customers not to go to the airport after failing to secure emergency funding to keep operating. Japanese Prime Minister Sanae Takaichi has met with her Australian counterpart Anthony Albanese in Canberra. Her 3-day visit is expected to focus on deeper cooperation in defense, critical mineral supply chains, and broader economic security. Both governments share growing concern over the regional security environment, with Japan taking a more assertive military posture in recent years. And speaking of Japan, let's talk yen intervention. Traders are on watch for signs of further action by Japanese authorities after the currency's sharpest rally in 3 years last Thursday. For more, joining us is Bloomberg Markets Live strategist David Savage. So walk us through the price action towards the end of the week last week, the reported yen intervention, and then what we're seeing this morning as well as a knock-on effect to that, David.
Absolutely. So we saw certainly that the yen is going to be in focus today. We saw after the alleged intervention, dollar yen move down to 155.50. We were back up around 157, and then just in the last hour, we saw the yen shoot higher. And again, I think traders are definitely on watch today with both Japanese markets and London markets closed. Japanese markets closed tomorrow as well. So, the question is whether Japanese authorities are going to look to take advantage of this thin liquidity to continue to prop up the yen. And certainly the historical parallel is there that traders are certainly expecting that there may be further action. But ultimately, these moves are about disrupting what we've seen as a negative feedback loop, and something that certainly Japanese authorities are increasingly concerned about with oil continuing to trend higher. So, certainly a risk, but what they're trying to do is introduce two-way risk to make sure that a weaker yen doesn't feed further inflation and put further pressure on JGB yields.
Yeah, I mean, essentially, you have a cautious Bank of Japan stance, and you have higher oil prices. So it's very difficult to see a sustained rally for the yen from here. Let me switch tact a little bit. I was earlier on looking at markets and what the European Open is going to look like. Tariffs once again on the agenda, with President Trump announcing these tariffs on European automobiles. What is the likely reaction going to be in markets today?
Yeah, Euro Stoxx 50 futures were looking positive, but it's certainly just another headwind for European equities and European growth. I think the consensus was with the Iran conflict that the pass-through would be most difficult in Asia, just because the more direct reliance on imports from the Middle East. And then, Europe. But I think, that picture has become more complicated as we see, particularly in North Asia, if we look again to Asian equities today, have a real tailwind in terms of the tech rally and this global AI capex cycle. Europe isn't as directly exposed to that. And so certainly when we see added pressure in terms of potential tariffs and more complications in terms of trade, that will certainly add additional pressure on European equities.
David, thank you so much. David Savage from the Markets Live team. Well, coming up, political tensions are rising in Senegal, threatening the future of the ruling party. We'll bring you the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersacci in Dubai. Political tensions are rising in Senegal, with President Faye warning his own ruling party could be at risk of collapse as a rift with the Prime Minister deepens. Our chief Africa correspondent Jennifer Zabazaja joins us from Johannesburg. Okay, so how serious is this rift between the President and the Prime Minister? Are we looking at a potential breakup of the ruling alliance?
Well, Jumana, many people are seeing this increased strain between these two leaders and saying there is a real risk to the economic and the political stability of the country, especially if you take a look at what we've seen over the past few months. Now, really, this boils down to what had initially started as some internal disputes behind closed doors about some of the policy things that were central to the Pastef party centralized. And now it's really become what seemingly looks like a power struggle at the front. Now, we should remember that Faye and Sonko founded this party, and now it seemingly appears like they're competing for influence of the party with varying degrees and visions for the IMF negotiations that we've been following closely, also personnel within the party and within the presidency and the administration itself, and even the future of the party. So much so that a few months ago, we heard the Prime Minister actually threatening to take the party into opposition if the president doesn't align with his vision. So what we heard over the weekend from President Faye is that he says the party is on a trajectory that risks leading to its downfall if nothing is done, and really saying that once the confidence is broken, there will be a new Prime Minister. And potentially, many people are looking at this and seeing a continued rift between these two leaders and wondering what this means for the future of Senegal, what this means for 2029, and also what this means for the Pastef ruling party.
Yeah, but at the same time, we were just covering all of those IMF discussions a couple of weeks ago, and that they have been quite fraught as of late. How is the political backdrop going to influence the potential evolution with the IMF around another package?
It is having quite an influence on some of these disputes, Jumana, based on our own reporting. These two leaders reportedly have different visions for how to actually go about these IMF negotiations. We should remember that a lot of what is central to some of these disputes is that this new administration came in and came out and reported billions of dollars in hidden debt. And so that led to the suspension of this IMF program. And so the big question has been, when will we see a new IMF program with Senegal and with the fund? Well, we did hear from the president over the weekend, and he said that there is no break with the IMF. He said that they do want a new program, and they're continuing discussions with the fund, adding that they are seeing that growth increasing, fiscal deficit has declined, and that potentially this is showing that the country is well managed. The question, though, and even what we heard from the IMF just a few weeks ago when we spoke to the Africa director, is a lot of the continuing negotiations are in the hands of the country, and the country needs to make its own decisions on what the future looks like in terms of macroeconomic policy decisions. If we're seeing potentially ruptures within the political establishment itself, what does that mean for the future decisions about a negotiated program with the fund? So many investors paying close attention to what this looks like moving forward.
Yeah, for sure. The political backdrop is raising a few question marks. All right. Jennifer Zabazaja, thank you so much, our Chief Africa correspondent in Johannesburg. Thanks. Now for a look at some of the other stories we're following today. Nigerian opposition figure Peter Obi has quit a coalition that planned to challenge President Bola Tinubu in the 2027 elections. Obi is a popular figure amongst Nigeria's young and urban voters. He cited internal divisions and legal disputes within the alliance for his departure. Coming up, the gaming retail chain GameStop is proposing to buy eBay for about $56 billion in cash and stock. Details on that story coming up next. This is Bloomberg. The The gaming retail chain GameStop has offered to buy eBay for about $56 billion in cash and stock. It is a bold attempt by the CEO, Ryan Cohen, to take over a well-established e-commerce name several times larger. Joining us from Hong Kong is Bloomberg Deals reporter Manuel Baigori. And Manuel, I walked in this morning and honestly, I was not expecting to see GameStop in the headlines. What do we know about this proposed deal?
Indeed, Jomana, thank you very much. It was a surprise, I think, to both of us. What a bold move by Cohen and his company. Definitely interesting to see, and potentially a very, very large deal in the making. Obviously, the proposal is out there. It's a cash and stock proposal to buy eBay, the iconic enterprise. We'll see a lot of skepticism has come out as first reaction from some equity analysts covering the stock and the industry per se. Obviously, two businesses that have been in a bit of a turnaround on their own, and that some analysts seem to think that they are both doing well, but obviously GameStop, with its own peculiar history, is a much smaller business market value-wise versus eBay, even though it is true that they have a lot of cash in hand and they've also secured a big chunk of debt financing from banks. So definitely the proposal is out there now. We'll see how shareholders of both companies react once they are able to digest the news a little bit more. But obviously, two businesses that have some also overlap in the collectible toys and resale. So there is definitely some complementary, assets in there as well.
Yeah, I mean, anyone who hasn't been following GameStop closely will associate it with the meme stock mania around COVID time, 21, 22. There was a whole movie about it with the roaring kitty and so forth. And you fast forward to today. First of all, it's a surprise anyway that it's looking to take over one of these legacy companies. But essentially, how good of a fit are the two companies going to be together, given their respective expertises?
Yes, indeed. I think that's one of the main questions that people observing the two companies have in mind, and also the market overall will be wondering how the two complement each other. I think there is indeed some overlap in assets, including collectible toys or resale. I think the two businesses in a way have been in a bit of a turnaround, trying to find the next strategic mantra for the next 5 to 10 to 20 years. They've both been struggling in their own ways as consumer demands have been shifting from the traditional brick and mortar to more online. So they are kind of like trying to find their new identity. Now, one could wonder whether in that potential turnaround of both, combining the two could make sense, but that is still a little bit too early to tell.
Yeah. Manuel, thank you so much for bringing us the latest in this potential big deal. Manuel Baigori. All right, quick look at equity futures before we head out. Things are leaning towards green. But that is it for our show, Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with me for Daybreak Europe. That's coming up next. This is Bloomberg.